All right, boys, we're back with the examples on not FX Replay, but TradeZella. I'm just looking for clean examples to kind of go over things that we use, right? So here's a good example of why we should avoid these 2 days. Doesn't matter if they expanded or not. It doesn't meet our criteria. So what is our criteria? Always, guys, is we always want to be ideally within a 4 hour or above universal model to frame reversals on the higher time frame, right? It doesn't mean you can't form the high and low of day from an hourly swing point uh, or whatever. You absolutely can, but it needs to be within a universal model. So what I mean by that really, let's kind of just do this real quick. So meaning if you want to trade a reversal in the higher time frame, ideally it's from a 4 hour or above key level. So for example, if this is a 4 hour universal model, right? Obviously you can trade it because it's 4 and above, right? But for 1 hour and above, it needs to be internal to the 4 hour and above reversal point to the draw liquidity. It needs to be internal to that. So any key levels internal to here, or maybe a swing point from the low of day. Maybe here's the opening price, of the daily candle or whatever. If it opens low, frames reversal here, then that's fine, right? Because it's internal to the universal model, right? It's models instead of models. That's really what you want, right? Also, what you want is always ideally you're going to be within a C2, C3, or C4 on the daily, the 4 hour, especially the daily and the 4 hour. Now, for the hourly and 30-minute, it's very specific, right? You can't trade C4 if it's creating a future gap. So just be aware of that. But those are pretty much our criteria, guys, on ideally what you want, right? So if you look here, let's go over this day, for example. Like, why can we not trade this? It's a C3, yeah? But where is your universal model? You're just longing at the high. Like, I don't like doing this. I don't like just longing these continuation days if you're not in a universal model, you know? So this is a hard one to trade. You see how it just kind of bullshits? There's no 4 hour key level, none of that. So it's just like low probable, you know? There's no SMT fill, like there's nothing really, right? It's kind of mid, right? And this day you can't trade either because although you do hit a daily key level, technically, this daily swing high, there's no confirmation to it. You just can't trade it. It's just simple as that, man. There's simply no, um, SMTs and stuff like that. So, yeah, you can't trade it. Now, what about this next day? Okay, finally we hit a daily key level. Here, you can see the previous day hit that key level. No SMT. So, what are you gonna need to form the low of day from? Simply two-stage SMT. If you don't have SMT with the key level, you're gonna need to form SMT another way, right? So if you go on the hourly here, you end up engineering low inside of the gap. So you guys could trade this if you're a London trader, right? You can see Asia session. This is perfect, dude. If you are a London trader, dude, this is the perfect thing to see. Like perfect. If Asia just dumps or like opens low first, that is perfect. That's highly likely manipulation, especially with no wick, man. But obviously there could be a wick. It's fine. If it's just straight up opens low first, that's perfect, bro. And then you form that reversal into expansion candle, right? That's perfect. But as you can see, we form our SMT here. Let's go on the 30-minute. This is the hourly or above swing point, guys. You see that? But it's important because this two-stage here is out of a daily gap, which is obviously a 1 hour above swing or a key level, sorry, or universal model. So go on the 30-minute. You can see that this is a valid strength is PSP because it's 2 amp candle is bullish. This is bearish. And I don't know if it actually sweeps this low or not. We don't really know, honestly, because it's just equal lows. I don't know. TradeZilla could be tripping. I don't know if it does that or not, but you have the two-stage anyway. So at 2:30, you can look for a trade. Let's go on the 5-minute. Is there a CSD inside of the previous candle at 2:30? 2:30 is right here. So yes, there is a CSD already. Right, so you can take a position entry, honestly, like this. You have options. You could just retest on the CSD. I might as well just mark execute that right there. Where you push stop loss at the low. Now, where can you TP, right? It's that daily open. That's TP1 for 5R. and then you can start to target all the way up here. But the internal draws to this range is kind of, there's not really any like relevant highs within it. It's kind of hard to say. So another thing you could do is like just mark out EQ, right? That could be a relevant level to TP at, et cetera. But let's look at the other potential entries here, because if you take the continuation, you're gonna take a loss, right? And that's valid. It's very gappy here. But if we go to 5 minute, yeah, there's like a pretty clear, I would say, CSD here probably, right? Like I would call it valid. It's pretty gappy, but I'd call it valid. So you're gonna take a loss here if you take the continuation. But if you take a positional entry, right, which is what I like to do. I like my stop loss as close to the low as possible. This is the SMT low, and you'd be safe. So, whether you take a loss there or not, whatever, blah blah, either one is valid. And again, if this is actually SMT here, that'd be great. I don't know if it is, to be honest with you, because it says equal lows here. So I don't know if there's a true equal lows or not. But if it is SMT, then this is a beautiful reentry, like beautiful reentry. This CTR here, man, that would be gorgeous, but we don't know yet. But we do know that price did obviously expand away from the low of day. So when it expands away from the low of day, guys, what is it going to create? If this is a London session low of the day, right, with the profile supporting, then New York should do what? Should continue, because we haven't reached the overall draw liquidity, which is going to be hard for the day. It's going to be hard for the day because that's quite far. But we can still seek some continuation potentially, maybe at the current high of days and stuff like that. But I wanted to go over this decoupling scenario because this is a good one. So you guys see this gap here in price. If New York wants to continue, this gap should hold, right? But as you can see, we had an SMT fill prior to 9:30. So you have your first HSMT here, like that. So this is the 7 o'clock low. As you guys can see, it offered some decent expansion, but and then 9:30 rolls around and it retraces price. So 9:30 rolls around, and you can see the decoupling. This has to go higher, this has to go lower. Now, what is the coupling's sole purpose to do? Is to basically, right, go basically counter trend, basically, to hit some key levels and then resync price. It's really simple, right? But we would decipher that this is the assets that is the one that manipulating. These other assets are going towards a draw liquidity because of the framework that we're in. We're in a daily IRL, ERL. It's the context. You can't anticipate drivers without context. It's like you can't do it, right? So one thing you could do is this is where you can actually start to enter these assets over here, right? Potentially before it happens, right? Because we understand that these assets that are decoupling, they should reach basically the most recent key level, ideally, or the relevant key levels, and then reverse there. Create SMT and then reverse there to resync. That's ideally what we want to see. So you could trade these assets as they're expanding away, right at 9:30, right? Because it's gonna happen at 9:30, like only. So it's something you could do. The only issue with here, you're kind of long in the high of day, but there's no close draw, so I'm not a big fan of that. But it's the idea. It's just the idea of it, really, that I wanted to show you guys. For example, like you maybe could trade this. You could fade. You could technically fade like whatever this is, like the hourly candle, like 30-minute candle. I'm just not a big fan of it. It works out here. You'd assume that it would close a reversal candle. And for example, like you would trade this smaller range, right? Universal model, right? This is like 15-minute or whatever, like 30-minute or hourly, whatever. Yes, hourly as well, right? Hourly manipulation range to the high, low and high. You can see from here to here. That would be a universal model, very quick and like in the same C2 candle, very, very quickly. That could be a thing you could do, but ideally there's a close draw for me to really trust that, but it's something you can do, but it's just up to you. But yeah, it ends up going pretty high, as you can see. It ends up getting all the way up here, which is actually insane. Like I probably wouldn't expect that, dude. That's insane as hell. But this is a good example of when to avoid price action, right? We avoided these 2 days, right? Because they're not inside of a universal model on the 4 hour and above. There's just no confirmation either way. Like you can maybe potentially frame the idea of, ERL. This is ERL, and then to IRL. That could be potential because you do have a profile supporting it, where it opens high first. There's no confirmation to it at the high of day, and there's not confirmation for continuation either, man. This is what you would want to see. So just no universal model, right? Because this could have been IRL on the 4 hour, IRL to ERL, wherever their tracement's at. Maybe it's, I can't tell. Let's actually go see. Yeah, it would be actually right here. That could be an example, right? And it's only confirmed because we, actually have this profile. But you guys get on me, and like, you just don't have it here, man. You would need the SMT fill again, dude. I don't know if it's equal highs or not. Trades will be bullshitting sometimes, so maybe there is SMT. I actually don't know. But on here, it's equal highs, so we can't use that, obviously. But if it was there, you could consider it. But you can't trade this reversal up here, guys. Can't do it. There's no confirmation, right? So you can't trade it. It's simple as that. But if we did have it right here in the continuation, that would be valid. That would be an example of a valid trade, right? Because you come into the session, for example, at 1400. Oh, this is 1400. Wow. Okay. I just noticed that's 1400, which is fine. That's fine, I guess. But yeah, you come to the session here with an open draw. This is basically the daily gap, no? Yeah, this is the daily gap. Pre-sales low is the daily gap on all these assets. Pretty large wick, I will say, on the daily time frame. Pretty large. I'm not gonna lie. That's pretty large. But you could scalp it for something. We could anticipate a daily reversal candle, right? And it would only, we'd continue that from this level here, but it just doesn't give you it. It's pretty simple. So if it did, though, yeah, you could trade continuations to the current low day only, though. I wouldn't really trust it to go all the way down there. But it did it, man. Like, sometimes price be doing and exceeding your expectations, for sure. But it can only do that in a universal model like scenario. That is the only time it can ever do that, right? Because you need to be in an expanding kind of like framework, where you can expect expansions. If you don't have that, then you can't do that, right? Because price will expand towards, or, 2 draws in liquidity. Sometimes it's unexpected. Like, I can't really anticipate that 1400 would do that crazy move like that, but I can at least maybe target this, just that, I wouldn't anticipate this, but I can still make 2R to this low, you know what I'm saying? So these are some examples of when to avoid price action. We're going to avoid this stay here, and obviously the stay here, because you can't trade anything, right? Let's do one day as well. Fuck it. So this day, let's see. So in days like this, we're not inside of universal model anymore because we already took out ERL. It's technically this high right here. It just goes IRL, ERL in one candle. So you're gonna have to target this. Like, your only option here is gonna be a 4-hour IRL inside of this range. So you have it, right? So this would be IRL, ERL, continuing off the preset range. We have that right now. Now, coming into the driver, this is 930. Do we have any type of crack and correlation? Nope. So you would need on the hourly 2-stage ideally, which you just wait. No, we don't have that. We have a PSP, so you would be stuck with trading this right here, dude. This is the only option. Universal sequence. You'd have to wait for price to create that gap. And if you get a SMT fill, then you could take it. All right, let's go over here. Boom, we got the SMT fill. Enter it. It's really that fucking. It's actually that simple, dude. Like, I'm not even joking. It's literally that simple, dude. You're in a 4-hour IRL. The day open. It kind of opened high first, but it didn't hit anything. Like, it's inside barred, so it's just consolidation, right? Consolidation. So I'm viewing the first manipulation as the first open low, right, or open high. We obviously went lower first into a gap, so this is fine. It's like, obviously, like, what are you going to take out? The previous day's high or low? Obviously, the previous is high, if I had to guess, unless they're going to inside bar, right? So this is absolutely valid to take. Let's see how it plays out, brother. And you just TP this. Oh, and this equal highs. That's even better, dude. That is even better. So, oh, this is great. This is actually great because this is a SMT here. And the fact that YM is actually stronger right now is good. It's because it's to break the SMT, ideally, right? So that would be nice if that plays out. I'll show you when you go break even, potentially. Oh, wait, yeah, we probably could. What the hell? Oh, we absolutely could. This is way above 2R. You can maybe in partial if you want to. Me, I will not personally. Yeah, I probably wouldn't, but we're up, yeah, 2.6R. 3.2R I'm not partialing personally, but we'll see what happens here. If it hits break even, whatever. Okay, boom. I mean, was that hard? No, it actually wasn't, right? We know that when it comes to session, this is the only level for price to continue from. Like, I love when that happens. Like, this is what you want, guys. It's like when you come to session, you're not second guessing. You know exactly where we should continue from or reverse from, right? It's pretty much that simple. You know exactly where this should happen. And these assets could maybe continue too, right? Because what are all assets doing at this moment, you know? This moment, looks like we're creating, oh no, I don't want to rewind it because it's going to cancel my trade, but at this moment, looks like we create a PSP right here. Now, ideally, ideally NQ does take out this low, ideally, but it doesn't matter anyways because you're trading the strongest asset. This asset here should do what? It should not be it should be creating the failure swing SMT. So, aka, it should not be taking in this gap, for example. So, what would happen here if NQ took the low? It would look like this, where NQ takes a low, creates SMT, while ES is in the gap, and this asset keeps the gap open. That's a really good sequence, you'll see. So you always want to trade the strongest asset there. But as you can see, like we create this PSP here, and then price starts to expand away. At that point, if all assets expand away, they're probably going to reach all the same draw. Obviously, probably, right? You can see this asset fails to manipulate this high right here. I can replay here, right? Yeah. This asset is failing to manipulate here. The previous candle is a gap. Previous candle is a gap, as you guys can see. This is obviously as well an hour. This is fine as well. So you guys can see we're going to create an hourly gap here. It don't matter. On these assets, we're not, right? They don't matter. We're like really high in the range anyways. This low is a PSP. I love two-stage SMT fills. They're great. As soon as you take that low out, what are you creating? SMT fill sequence, right? Equal highs. That's perfect for SMT breaks. We already know that in terms of advanced premium discount. So you guys see, like when you wait for shit, like wait for proper framework. So you miss the reversal, it don't even matter because you probably can get continuation. Just like we did here, bro. Did we trade the reversal? Nope. We did not trade the reversal. We still got opportunities, right? The leading asset's going to give you that main opportunity to the high, but you still got opportunity for the lagging assets potentially, right? As long as we get a strength switch or this asset fails to manipulate. This is obviously failed to manipulate the high, right? Directly from the course. It's pretty simple. V-shaped signature, gaps in price. You can take that, man, all day. This is exactly what we want to see, right? You want to see CSDs happening in one candle, two candles, gaps in price, all that, V-shape. So, yeah, I think that's a pretty good example. Little video for you guys.